Yeah, we are live.
Maybe. Yes, I guess we are live. Hey, everybody. Welcome to another live from Upekkha. Uh, Today, we have with us Akash from Kloudle and Vishnu from VideoKen. And I will be your host for the day. My name is Rohith, and I'm a part of Upekkha. I head the data team within Upekkha. So that's my quick introduction. So let's go alphabetically. Akash, would you like to take a minute and introduce yourself and your company, please?
Okay, sure. Hi, I'm Akash. I'm a career security person, and I'm trying to solve digital security with Cloudle. Basically, the world is moved to a place where there are just too many cloud accounts, too many SaaS accounts, and these digital assets hold all the value. And because clouds are dynamic environments, they change rapidly, and one misconfiguration can lead to like really big data breaches for you. So we're trying to automate all those aspects simply because there's just not enough qualified people out there. So that's what Cloudle is built and is like expanding on now.
Wonderful. Thank you so much, Akash. Vishnu?
Yeah, hi. I'm Vishnu from VideoKen. And while Akash is a career security guy, I'm a career sales guy. And VideoKen is about 5 years old. What we do is we make videos more interactive by using AI to index them and make them easier to consume. Because now, more than ever before, videos are used all over the place, especially when it comes to training and webinars and trade shows. But the problem is most people don't watch these videos. So we are trying to transform these videos so that people can actually watch them with ease, just the way you would read a book.
Wonderful. Thank you so much, Vishnu. I'm keeping my fingers crossed and hoping people are watching our video. Right? So let's set the agenda for the day, right? Today we are discussing, your best bet on funding as a SaaS startup. Would that be revenue? Would revenue be your best capital, right? So before we dive into that, I would like our audience to understand, your own experience with funding. You could have ran multiple companies, you could have raised multiple rounds. So I just wanted to set some context into where you guys are coming from and what experience you've had with funding. So if you can, like, without going into details, because we will deep dive into each one of them, quickly say about have you raised funding? Yes, no. If yes, how much have you raised? When have you raised? How much time did it take? Etc. Etc.
Vishnu, why don't you go first in this one, please?
Sure. I thought it was a question for the audience.
Oh no,
Question for
that's
us.
for Vishnu and
That's for us.
Akash,
That's for
please.
us. Good. Yeah. So we did a round of seed funding way back when we started. This was early 2017. We actually raised a seed round. We got commitments even before the company even started, right?
The dream, right?
Which is yeah, what a lot of people dream about, which is fine. The key thing is that in hindsight, again, all these things is in hindsight. In hindsight, I think we would have probably gotten to our product market fit and our growth that we are experiencing now much earlier if we hadn't raised that round of funding. Right?
Got it.
Of course, now, as I said, it's all in hindsight. But one of the, my philosophy, and I strongly believe in it, is sell first and then raise, right?
Got it.
Whatever it is, right? And again, no, we raised funding. We raised an early round of funding, but we had to struggle to get to the product market fit. And when we got to the product market fit, the money that we raised was already spent. So then we almost had to bootstrap our way to where we are today, primarily by using customer revenues as capital. And
Got it.
yeah, that's probably the best source of capital you can get with no strings attached.
I hear you. So we will deep dive into your experience, understand why you said what you said. So before that, maybe we'll hear Akash's experience.
Yeah, so at Cloudle, we have raised one safe round. I don't know if it's even called a round. And we were bootstrapped, very, very comfortable, I would say. It's just that the signaling for the industry that we're in and the kind of engineering talent that we need for the next phase, uh, because of the reality of today, right? Because a lot of external environmental factors also meant that we had to go down this path, right?
Got it.
And see, what Vishnu says is absolutely the way to do it, and what we are experiencing is also absolutely the way to do it. Everyone, there is a vision or a dream that we want to get to, right? And funding acts like some kind of a resource, right? With any resource, some things get prioritized, which means that there is waste, there is inefficiency in other areas, right? And it's like a trade-off between money and time, primarily,
Absolutely.
and mostly environmental factors make a huge difference, right? So
Absolutely, absolutely. So I think it'd be very safe to say that it's highly contextual, right?
yeah,
For each one their own, and I think what we can do better to provide justice to our audience is to understand your context better and why you did what you did, right? So that because we would not be able to cover all permutations and combinations of the different contexts out there and why somebody should do. And so I think we'll stay away from the generic gyan and we'll dive into your own experiences and your own context and how you reacted to those, right? Great. So now, furthermore, putting an umbrella out here, right? Both of you are Upekkha portfolio startups. You've been a part of Upekkha. I think Vishnu, for over 3 years now.
Yeah, 2019. Yeah, a little over 2 years.
Little over 2 years, got it. And Akash 1 year, right? C6 batch. So we all know that Upekkha practices and propagates value SaaS. So could both of you take turns and explain how value SaaS occurs to you? What is value SaaS to you?
sure.
And does value SaaS and funding go together? Are they complementary? Are they not? Does value SaaS say you should not raise funds? Can you throw a little light upon that, please? Maybe Akash, you can go first on this one. We'll keep alternating.
I'm gonna defer to Vishnu, but okay, maybe we're taking turns. See, for me,
Yeah.
it's never been a question of that it's an either or. Value SaaS primarily teaches us that go figure out what's your best domain, figure out your best high value problem you can solve, figure out who has that as a painkiller, right? Like who really has the need for them, it occurs as a painkiller, and then go about building the product based on demand side, right? When you do that, right, whether the money is coming from customers paying you, or maybe you have something upfront, it's just another tool, it's a resource, right? So I don't think value SaaS ever says that don't raise money. It's more about how you use the capital, right? It's
Got it.
about efficiency, and especially the one thing that they keep reminding us is like it's easier to earn a dollar than a rupee. So if you're in the right market and you have the opportunity to utilize the arbitrage, like in the previous 2 decades, the companies from the Western world came to India and used the opportunity,
Yeah.
and now that's the opportunity we are getting. So I don't think they're exclusive at all,
Uh-huh.
right? There is a emotional component to raising money, as
Uh-huh.
Vishnu explained, and they experienced it. It's like when people have money in the bank, they're like, okay, yeah, we can. I think it's human nature to be a little complacent and be less efficient that you would likely to be, but it does unlock a lot of other things, right? And typically, as a founder, I feel better if I know that I have money in the bank for my team for a year, and
Absolutely. Right.
that's the first metric we look at anyways, right? Around way. So when that happens, then maybe that makes me more comfortable to like plan bigger. But some
Got
people
it.
may go on the other way, right? So
Yeah.
for me, this is what value SaaS is.
Wonderful. Thank you, Akash. Vishnu, your take on
Okay,
value
so
SaaS?
yeah, look, value SaaS is a methodology, right? It's even
Yeah.
like it's even a faith. Funding
Mm-hmm.
is just a resource which is
Mm-hmm.
part of your journey. It's like a bus, right? People get
Mm-hmm.
on and get off. Uh, Funding is very similar, right? But
Mm-hmm.
value SaaS for me is the bedrock on which you build the company, the business model, and
Mm-hmm.
also the value that you deliver to people who are going to pay you,
Mm-hmm.
right? So it's a very, very clear differentiation for me, right? Value SaaS is the foundation, is the bedrock. Funding is just a resource, right? At different times, you need different resources, right? Sometimes
Got
it's
it.
equity, sometimes it could be debt, sometimes probably you have enough profits that you're actually returning. It
Mm-hmm.
doesn't matter, right? It's just a resource. But yeah, value SaaS is definitely the foundation.
Got it. Thank you so much, Vishnu. So I just like to remind our audience that you can start leaving your questions, right? And any questions that you may have for Akash or Vishnu, please go ahead and put them in the chat box, and I will get to them, as and when I find them relevant in the course of a conversation. And towards the end, we'll keep a small chunk and ensure that those are addressed, right? We'll try to address as many of them. Okay, cool. So now moving forward, Vishnu, when you opened the conversation, you mentioned that maybe you would have reached product market fit earlier if that you wouldn't have raised that round. So can you now this is where we deep dive, right? Can you give us good context as to what happened in 2017? How much did you raise? From whom did you raise? How many pitches did you have to do? How much time did it take for you to raise? How many months did you burn this in? I don't want to put you here on the spot, but whatever you're comfortable sharing, if we can get to the specifics, I think it'll be very helpful for our audience to get a greater understanding of the journey, and then understand why you did what you did. So over to you. I understand, of course, you might have limitations with what you can share, but please share what you can. Thank you.
Sure, you're asking me to dig up ghosts of the past. So okay, so I'll without spending too much time, as I said, the company started in Jan of 2017,
Uh-huh.
but because of the founders and the credibility of the founders, the thesis at that point is we raise a round of funding, we build a team, build a product, and then
Mhm.
go to market, which is how a lot of founders or want to be founders also think today, right?
Mhm. Mhm. Mhm.
So we got a commitment. We raised, and this is public information. We raised $1 million in equity.
Even before you started.
Even before we started, well, we got
Wonderful.
commitments. We closed the
Uh-huh.
round maybe a few months after we incorporated, but we
Okay.
got
Okay.
commitments before we started. Again, it's based on mostly from angels, a few institutional investors, just a
Mhm.
couple,
Mhm.
but a lot of angels. People we had worked with, their contacts.
Mhm.
Um, and also at that point, our thesis was that we wanted to build a video-based learning management system, right?
Mhm. Mhm.
Because we had the IP, we had the know-how, and we thought since videos are mostly used today and it's so popular as a medium,
Yeah.
right? We thought we'll build a video-based learning management system, and we started talking to people. We started building it out from the word go. And we got a few pilots, and we also got a very large customer who came and signed up, right?
Mhm.
Which again, in hindsight, uh, was not the right thing that happened to us, because that was the
Mhm.
only customer we got for the product.
Mhm.
We just couldn't get product market fit because look, LMS is like a saturated market. Most companies that we approached had two LMSs, if not one, right? And
Mhm.
here we were going in with the third one, right? So while the
Mhm.
technology did solve the problem, I think what we went to market with, right, was probably the wrong product.
Mhm.
Um, and this is where the funding comes into picture, right? If we hadn't raised a round of funding, right, our backs would have been to the wall, and we might have realized that sooner than later and made a pivot, made changes, right, which we eventually did, like a year later, right? But that's after going through that process, the painful process of building.
So
the
in a
product,
year, had you burnt the million? Only if you're comfortable.
I would say, no, I would say,
Okay.
almost, not fully, but yeah. And so that's, again, hindsight, sell first and then raise. We could have probably done that, but again, that's all in hindsight, things we cannot change. But I think what we had was a very, very good technology around which positioning and messaging had to be built. We had to go after the right ICP, find the right ICP, right? Which is where the whole value SaaS methodology came into picture. And once we did that, I mean, the same product, right?
Yeah.
We just started selling it repeatedly without making any effort, right? So then we got to product market fit, and the last 2 years has been only funded by customer revenues, recurring customer revenues.
Wonderful. So there's been no funding
with money,
after
we
that.
couldn't hit product market fit, but without money, we were able to get to product market fit, identify our customer who's buying repeatedly, who sees the most value, and then grow from there, right?
Got that. Vishnu, if I may ask, and again, if you choose to answer, you raised $1 million at for how much equity?
So not much. Majority is still owned by the founding team and the employees, right? Over 70% is still owned by the company, right? So we got a pretty good valuation when we started and all those things, right? But again, all those things are on paper, right? What really matters is, are we building a business that is
sustainable,
that has the potential to be large, sustainable, and profitable, right? And I think now we are in a position where I think we can build that really, really strong and fast-growing business.
Wonderful, got that. So, hypothetical question, if you were to raise a round, okay, when would you do it now, given the current situation of the company?
Good question. So at this point in time, for us to continue in our current trajectory, we don't need any external funding. We have a very strong core set of marquee customers who come and buy from us year on year, and the wallet share that we have with them is also growing year on year. And we should be able to build a very capital efficient business, just the way we have done in the last 1 to 2 years, right? But what we want to do is we want to try and get through the inflection point and grow faster. So if we were to look for a raise, it'll probably be sometime in 2022. We would start looking at a growth round, because at this point in time, I believe we have product market fit. We have repeat customers. We have, we earn more than we spend, even on sales. But now is, how do you scale it, right? Now I have, say, 15, 20 core customers who are repeatedly buying from me, right? Now I need to go find the next 200.
Got it.
So for the 200, I mean, we will get to the 200. The question is how quickly can we get, right?
We understand.
So that's the only reason we would raise, and that'll probably be next year, but not for working capital, not for paying salaries. For that, we are pretty self-sufficient.
You're taken care of. So Vishnu, if I have to sum it up, would it be fair to say that your advice would be to not raise funds to get to product fitment, but get to product fitment and raise funds to scale and grow and, for that massive growth?
Correct. So, and this is what I tell a lot of founders whom I meet. I'm like, although we raised money, it didn't work for us. Maybe there are other startups that are smarter than us. I'm sure most of them are, right? But in most cases, it's good to build that minimum sellable product, right? Before going and raising funding. And this is, again, take it with a grain of salt. This holds good for software, SaaS, and all those things. Unless you're an IP heavy business, right, where you're creating a new medical technology or a medical instrument, or like you're working on a research for cure of whatever, some crazy disease, right? Then your gestation period is like 5-10 years, right? So then you need that capital upfront, right?
Correct.
But for SaaS companies, I think you should be able to get to that, get a few customers. Even I think even if you are able to show like a handful of customers who love your product, who are coming back for more, that is good enough, right?
Wonderful.
4 or 5 products, if you are able to build with that MVP, right? Not MVP, I call it MSP, minimum sellable product. They should be willing to pay. Then I think then you can go and say, okay, I've established this, and now I want to go there.
Wonderful, wonderful. Thank you so much for sharing that with us, Vishnu. Now, shifting focus to Akash, right? Akash, you mentioned when we started that you have raised a round through safe instrument, right? So maybe what we could do is take a quick 30 seconds and explain what safe is to people, and why did you go for a safe instrument versus the price round or the equity round, as we call it. And then the third question would be as to like, who did you raise it from and what was the rationale behind raising it as a safe?
Okay. So I'll start with the answer to the third question.
Sure.
It's with upfronts, right? It's the Upekkha fund. And
Got
it's safe simply because that is what came as recommended, right? And very sorry to disappoint you. I don't really have an extensive philosophy about fundraising. Right? For me, it's like one of the things that's required for
Got
us
it.
to fulfill our whatever is our North Star vision or something, right? In case of for Vishnu, they had the ability to build something, right? Which works with video and ML and AI. Right? It's very very deep tech, right?
Yes, yes.
Whether the money was there or not is immaterial, right? So they had that access, they had the ability, so they had that option, right? For us, where we are, we started by being absolutely clear that we had a minimum sellable product. We were bootstrapped, we were operationally profitable, we still are operationally profitable, right? But the reality of the market that we are in, right? Where are we headed to, right? For us, 0 to 1 is a milestone. 1 to 10 million ARR is a milestone. 10 to 100 is a milestone. It's too far away. Can't really plan for it. But if you really think about it, what our underlying industry is, right? We're in cloud security. Digital is basically depending on cloud. Cloud for the big three currently in 2020 was $60 billion revenue annual, right? They're all saying will be $1 trillion each in 7 years, right? Cloud spending will be $1 trillion, right? So security is going to grow accordingly. The competition that we have, the companies that we look at and be like, oh, they're offering something similar, are raising. They're already at like Series C and stuff. They raised $500 million and all, right? And obviously they started early. They have hundreds of engineers and they're doing more and more, right? But if you want to build anything comparable, whether it's features, whether it's like being able to compete with being in the the market that they are selling at, right, which is US mid market, we realize that there has to be money in the bank. Right?
Absolutely.
When there is money in the bank, we will have choices whether it's like founders travel or it's like set up an office, the go-to market, just to get in the marketplace for AWS security. There is money that we have to spend. It's as simple as that, right? So keeping all that in mind, we started by saying, ki, okay, let's start with step one, which is what do we have available? Upekkha has this amazing thing called upfronts, which I think started as a consequence of Upekkha folks realizing that pandemic is tough, and it continues. And I remember that conversation where this was announced that something will happen, and then the fund got announced. We were not sure what we would do with that money because we were like, yeah, we are making salary. We don't really need money to do things. But then, as we have tried to hire senior engineering talent, as and when you try to hire other senior roles, they feel that, yeah, here you are a bootstrap company in a domain that I hardly understand, and here is a B2C funded company. You know what? I'm going to bet my career on that, right? So, one of the bottlenecks we identified was that hiring is going to be a challenge. And what are the signals that people join you early stage, right? Either we have great PR, requires money, or we are able to like crack the social somehow, right?
Right.
Which depends on founder personality, right? I don't really have that. Maybe
Mhm.
some youngsters have, right? I come from a world when we did not really need to broadcast our breakfast every day, so it's a different way to think about it, right? So at one point we're like, okay, money in the bank is assurance, which allows
Right.
us to say that, yeah, let's go get that compliance that all the mid-market and enterprise expects, right? That compliance costs money. It has to be maintained. That costs money. And that is how we went about it. Safe allows us to do two things. One is that we got some money for a promise, future promise. And if we meet that valuation that has been set, right, we have given away less amount of the company and equity, and we have money in the bank, right?
Right. Right.
And this has given us a minimum bar that when we go out raise more money, we should really think of our valuation being a little higher than that, right? Again, this is not, value SaaS has taught us that it's not a fundraising, leaderboard. This is just
Right.
so that at this point, money will help us do something to get to 1 to 10, right? One
Got it.
will happen at some point soon for us. And then when you start planning for that, how do you expand the team and everything, right? If you have money in the bank, things can happen, right? And, if we had access to that talent without it, if the founders were able to like understand security domain and also code whatever engineering that we need,
Yeah.
then maybe money is not the resource we would have looked at, right? Something else.
Yeah.
But eventually, it just boils down to that, right? That if you want to be in
Right.
a brand heavy, trust heavy space, which is
Correct.
growing so fast,
Mm-hmm.
if we can go raise money and put it to use, some of it will get wasted. There is no denying that, right? It's
Got it.
not
Got it.
from going to like barbecue nation and thinking that you will have that unlimited meal and you'll do justice to it. But it is how it is. Some people will waste it. Some people will fully utilize it. But without that, there is not that option isn't there,
Got
right?
it.
So
Got it.
do you rate the time it will take for you to get there, or do you want to like just try and move fast, right? Because the world is moved to a certain place.
Thoroughly understand it. So, would it be fair for me to say that, given the environment that you were in, raising this round would give you the ability to not worry about a few rudimentary things and go ahead and express yourself better as a founder and as a team in a high-paced growing environment, and that is why you went ahead and raised this round?
Yeah, I think it's a little simpler than that. It's not
Okay.
even abstract. When we talk to senior techies who we believe would be a great force multiplier for us,
Got it.
so that we go towards product market fit, right? We will be able to talk without the disadvantage we have currently, because somehow in this day and age, being bootstrapped is saying that there's something wrong with you, right? If they really
Right.
understood business, they would get it that, yeah, this is far better in making
Yeah.
technical
Yeah.
choices and bunch of things. But that's not the world we live in, right? And where did I get this understanding is value SaaS. Just like you're selling to the customer,
Yeah.
you're selling to the future employee, right? And
Yeah.
when
Yeah.
you start talking their language and what their expectation is, right, you realize that this is what will help us get past whatever is their fear, right? And that's where we are. It's simply as a signaling mechanism for us, and once we have money, we'll put it to use. There is
Got it.
no
Got it.
denying that. Yeah.
Wonderful, wonderful. And I think it was very candid of you to say that, some of this money will go to waste, right? It might. You do your best to ensure that it does not. But I love the analogy where you said that you go to Barbecue Nation and you won't do a pura paisa vasool. You are not going to finish everything that they supply, right? So I think that's a great analogy. Thank you for that, right? So I also want to pick up on another thing that you said, right? In this day and age, I know this is slightly generic, but I think this is something worth discussing, right? In this day and age, people have this perception that if you're bootstrapped, there is some problem, right? Or maybe you're, or rather, let me put it like this: maybe you're a fool to remain bootstrapped because there's so much opportunity out there, so much money out there. Everybody wants to invest in good companies. So, what is your general take, both of you, on this one? Right? Just looking at the current, maybe for a lack of better word, the frenzy in the market, right? What is your current take on, or the market, the money that's available, and the way companies are like mushrooming, raising, going bust, etc., etc. Because in SaaS we've noticed that maybe 20% of the top performing companies have gone ahead and raised rounds, right? Maybe they would have raised small little rounds, but they are not typically uh, a funding, a company that's built based on funding, right? These are all primarily built based on customer revenue. So in when you have these polarities, right, when you know everybody in market are behaving one way, but the top performers, there is example to show that it's done another way, then why do you think people are behaving the way they are?
I can go first.
Sure.
Please, Vishnu.
I think it's about the loudest voice in the room, right?
Mm-hmm.
There are good examples on both sides, right? There are companies who have bootstrapped and grown well, and there are companies who have raised external funding and grown well, right? There's no right or wrong,
Yeah.
right?
Yeah.
You have amazing examples like Freshworks right here, who raised multiple rounds, right?
Yeah.
To grow so fast that they got to IPO very recently, right?
Absolutely.
But at the same time, you have companies like Latent View, which went IPO in India, right? Which is not as easy as probably going IPO in the US, right? Completely bootstrapped, profitable, under the radar. Nobody knows about the company. Hardly anybody has heard about it. Then there's Zoho, there's Zerodha, right? So I think it's just about what gets the frenzy is because it's probably written about and spoken about so much. But I think it's only a small percentage, right? Because as founders, you course correct almost every few quarters, at least in the early stages, right? There might be a time when you don't need external funding, but at the same time, there may come a time where you want to grow really fast, right? Build up on the momentum for which you raise external funding, right? And external funding could be even going IPO is an external funding, right? It's just from retail, whereas the funding that we hear and we are talking about right now is from institutional investors, right? So, so there's no right or wrong. It just depends on the company and the situation and also the kind of market you're in, right? Some markets are probably not seen as too hot. Again, it also depends on a lot of other factors. And there's a herd mentality in both sides, right? There's a herd mentality on founder side, right? When you see one food tech startup, you see like another 25.
Yeah.
And why do you see those 25? Is because the one is spoken about so much and everybody's talking about them and they're in newspapers. Otherwise, probably the founder wouldn't have thought about food tech, right?
Yeah.
And the same is in the case of investors, right? It could be VCs, it could be institutional investors. It could even be people like us, right? When you see a lot of people go after a particular mutual fund, you do the same thing, right? So I think it's a bit of both. And I think you need to, as founders, you need to kind of cut through the frenzy. Like I can tell you, at least in my case, until a couple of weeks ago when my team came and said, you're not helping the marketing team enough. As a founder, I started going and posting stuff on LinkedIn, right? Until before that, for a year, I never logged into LinkedIn. Right? The only person who logged into LinkedIn was our HR associate. She would use my login to go and post about jobs.
Uh-huh.
So as a result, I don't even read or hear about any of this.
Yeah, yeah.
So the thing is to cut through the frenzy. Just the way newspapers are full of good stuff and bad stuff, right?
True
Depends
that.
on which side of the newspaper you start reading from. You start from the last page, you read about sports, cartoons, and by then it's time to go to work, right?
Mm-hmm.
So yeah, as founders, you need to cut through the frenzy and have a very clear mind about what you're doing, whose problem you're solving, and how deep you're solving. Everything else is just noise,
Got
at
that.
least for me.
Thank you, Vishnu. Akash?
Wow. So I have to recover from what Vishnu covered everything very well. But Rohit, like, think of this, okay? I'm going to tell you, don't think about an elephant.
Uh-huh.
Okay, don't think of an elephant.
Got it. And you're thinking about the elephant when
Yeah,
the minute you
so
say that, right?
I want you to understand that the frenzy is because right now you personally, are involved in a place where you think about this day in and day out,
Right,
right?
right, right.
And there is a point of view that employees have. The
Mm-hmm.
people who are amazing engineers, but they're like,
Mm-hmm.
yeah, I don't think I'm going to start up. I don't have that founder drive, but I do
Right.
want to go on that early ESOP,
Mm-hmm.
get some equity so that I can build some wealth for myself because
Mm-hmm.
others are right. So that's
Yeah.
one crowd. Then there are other founders who are so well versed with business and
Mm-hmm.
sales and marketing that they're like, you know what, let me just get a decent idea of one specific incremental improvement in an
Mm-hmm.
area, and I can take care of the team building and whatever, right?
Right.
I come from the other end, right? I come from like understanding just security and applying security, right? So for me, being at Upekkha was the best thing ever
Mm-hmm.
because I got an education
Mm-hmm.
on everything which is not related to technology, right?
Mm-hmm.
So for me, the frenzy is not so much because people just want funds,
Mm-hmm.
but even without COVID,
Mm-hmm.
right? If the pandemic had not really caused such disruption,
Mm-hmm.
we have never lived
Mm-hmm.
as a human race. I've never lived in a time where it is accessible for so many people who don't
True.
have, but they have the tools to create wealth. Now, what
Mm-hmm.
that means for them can change, right? It could just
Mm-hmm.
be that they're collectors of video games, right? For them,
Mm-hmm.
that's that collection is wealth, right?
Mm-hmm.
Or the ability to like spin up a server and put their thoughts in a blog or today I was reading about someone this TikToker called Miss Excel.
Mm-hmm.
She basically posts about Excel shortcuts, right? MS Excel,
Okay.
and
Uh-huh.
because of that, she earns six figures daily from training, Excel training.
Wow.
Her entire marketing channel is TikTok, and when TikTok was about to be banned in the US, she moved to Instagram or something. But she has like
Mm-hmm.
some, I don't know, millions of followers or whatever. All she's doing is talking about Excel, right?
Mm-hmm.
So that access to a
Mm-hmm.
lot of people who really want to use it is like access to market without really the upfront knowledge barrier or the infrastructure cost of setting that up, right?
Mm-hmm.
They can't really go to an ad agency and be like, hey, run campaign for me or a banner ad or something, right? The
Mm-hmm.
techie is going to go start a server and build their API. The
Mm-hmm.
content creator is going to go figure out where they'll be like appreciated and put their content up for this thing, right?
Mm-hmm.
Stock market lovers are going to go get on these apps like Robinhood and iRace or whatever else is out there and be like,
Mm-hmm.
okay, let's beat the market or let's beat the analyst who thinks that they know too much, right?
Mm-hmm.
That's never happened before, right?
Right. Right.
And what's happened is, at least in the English speaking world, right, a lot of the world is like the governments have realized that, hey, they cannot really do much. So private enterprise, even if they don't really have, very encouraging policies, they're like, let's step out of the way,
Yeah.
right?
Yeah.
And that's the whole thing with internet and smartphones and 4G. These are like fundamental shifts, even
Mm-hmm.
without COVID. But it's just that
Mm-hmm.
with COVID, they're all like accelerated. So it
Mm-hmm.
seems like a frenzy to you because you're looking at it, right? To
True that.
me, to me, daily it's like a question of how everything is so unsafe. From
Mm-hmm.
the toaster that may have connected to the internet or someone's pacemaker, right?
Mm-hmm.
Because that's my worldview and your
Got
worldview
that.
is very different. uh, there will be some people who will try to be like, okay, let's take a shortcut. Everyone is becoming a founder with fundraise. Let's go become a founder. There'll be some employees who are like, yeah, nah, I will be able to work independently, or I'll be able to like do the work of three people, of team leader, engineering manager, and architect when they're not qualified, right? Because they feel that they will miss out. The same thing investors will go through, right?
True
Uh,
that. True that.
there will be no structured, nice way where new enterprise will emerge. It will always seem noisy. This happened in 2008 after
Right.
the banking collapse, right? Bunch of those companies that we think are Decacon now basically emerged out of that, right? I
Right.
started freelancing because the company I used to work with, right, they stopped outsourcing to India. So I like go find another job, or let me just become a freelancer. I was in network security. I used to write like rules for packet analysis, and then I figured, who will need that in Bangalore, right? Bangalore is full of like app companies,
Right.
mobile new thing at that point. I was like, let me go, go teach security to app companies. So whenever some things happen, right, things become easier, but it occurs as that. So I don't think companies were not dying 6 years ago or 5 years ago or in 2019. They were. Bootstrap companies were dying. Funded companies were wasting money. And at the same time, on the other end of the spectrum, bootstrap companies were doing really well. Nobody was talking about them. Funded companies could have been doing super well, but the mainstream media was like busy discussing some war or some presidential election, right? Now mainstream media is in the mix, especially with things like crypto and easy access to your stock tools and whatever, and the world's very, very frenzied, right? It's all the same. I would say we are in a very, very good place, especially with COVID. Once the pandemic is over, and the overall disruption, the playbooks of whatever worked in this era, right? 2020, they
Right. Right.
once we start writing those, we will realize that we got most of it wrong, some of it right. But if we have survived the pandemic, right, with
Right.
money in the bank, and for me, the biggest win was that we didn't have to let go of any person, right, in our company because of
That's
sort of.
wonderful. Yeah.
So if we can do that, then obviously we will get through to something, right? So for me, the frenzy is not there. It's just that I have clarity, like Vishnu said. Once you have clarity, what value you'll bring to the customer, right? Then you don't really care about the other aspects. So that's where we are.
Wonderful. I think we started with funding, but somehow the conversation has taken us a little above funding, even though that was the gateway. And both your answers, both Vishnu and Akash, gi- have kind of put it out that at the end of the day, it's a life perspective, right? Uh, and to dumb it down, it's context, right? Where you are, what works for you, do that, and things around you keep happening. Don't think of the elephant. Don't talk about it if you don't want to think about it, right? As simple as that. Wonderful. That's lovely, right? So I had a few more questions, but I think we are shy of time.
Okay.
So maybe what we could do now is maybe quickly give both of you a quick minute to add any closing thoughts, anything that you predict or you see about SaaS and how it's going to emerge and how capital is going to play a game over here. I think we have new things like RBF coming, and I think capital is going to become more and more accessible. So, quick closing thoughts on any of those?
I go first. I am very, very bullish about this decade being of value created on top of cloud and SaaS, right? And it's almost going to look like a gold rush. And the people who made the most money, I think, during the gold rush in the US were the shovel makers, right? So that's why we are very clear that Cloudle will be the security provider for your digital assets, whether you are a SaaS or a cloud or a crypto. And that's the plumbing we're going to provide. And our vision is that if you are in the cloud and you're doing your job, you're making life great for your customers, and you can focus on that because we take care of security for you. I think it's a fairly challenging and interesting thing to solve in this decade, right? And
Got it.
there'll be various instruments for fundraise or getting to the next level, based on where we are and how we proceed, and maybe sheer dumb luck, right? We will hit the right notes and we will be a success. And my words will also sound like a pundit's word, but we'll see how that pans
Keeping
out.
fingers crossed, right? Great. Vishnu?
Yeah, I think this is going to be the decade for SaaS. The category has been defined for a while, but I think now it's also easy to do it because, as Akash mentioned, the cloud is available. It's easy, right? It's very easy to spin up a service and start serving customers. So we're going to see a lot more SaaS companies, and I think more importantly, we'll probably see SaaS being used in areas that we never expected. Right now, it's mostly around billing, payments, buying software, and things like that. But I think it's going to move beyond that. Media is already looking at subscriptions, right? So you're going to see more business segments being offered to consumers in the form of SaaS. As a result of which, there's going to be more opportunity for SaaS software makers to solve problems that that are going to come up, right? Because every time, wherever they scale, there's going to be a problem.
Yep.
So that's my view.
Wonderful. Thank you, Vishnu and Akash, for sharing your views. I think it's a great time for SaaS. And to borrow Akash's words, yes, it's a gold rush. And in a gold rush, when you try to find gold, you might find gold, you might not find gold. The odds are good, but you might or you might not find gold. But the sure shot way of making money is by selling shovels, right? Because everybody wants to dig gold. So that's great. What I'll do is I'll loop in one audience question so that we can just go ahead and I have Neeraj asking, does discounting invoices to clients help bootstrapping companies? Gentlemen, your thoughts on that for upfront payments?
It does. It doesn't. It's like,
again, it's perspective, right? There's no right or wrong answer here. I personally don't believe in that because especially if you're delivering a particular value, you should be paid for that value. And while we do a very good job on our pricing and stuff like that, we don't discount, just to get people to pay upfront. Although most of our payments are upfront, we don't go down that path. But again, there's no right or wrong. I've sold software in the past where I provided discounts if people buy for 3 years upfront or 2 years upfront. It's actually built into the business model. But that again eats into your recurring revenue much later.
Right.
So again, if it's your first customer, absolutely right. I don't think there's even a question. There's a debate. But I don't use it as a policy, and it's a very bad precedent to set.
Got it. Akash, your take?
Yeah, see, if it's a tactical thing you're doing so that you can make some targets, or there is a type of customer which would look really good on your about page, go for it. But if you repeatedly do it across customers, across your verticals, maybe then the value isn't there, or maybe that you haven't actually hit the PMF, right? It could mean that. But if it gets your cash flow going, and then you are going to stay bootstrapped, and it gets the money in the bank, money in the bank. So maybe there could be a promise of future payment, or maybe you do a payment plan. There are various ways, right? Discounting is not the only way to offer a discount. There could be other ways.
So I think the question was more specific on to the point that to get upfront payments, right?
Correct.
So maybe the question is asking that what would you go for? Would you go for $10 payments every month and make it $120 at the end of the year, or are you willing to give a $10-20 discount and get 100 upfront?
You do both, right? If you're selling these lightweight softwares that people can buy, pay monthly, most of those you have an annual plan, you have a monthly plan, right? You might have that with Netflix, you may have that with Spotify. There's an annual plan, monthly plan, right? You can choose which one you want. If you say I'm not sure about my usage, I want to try for 3 months and then figure it out, then as a customer I'll do only for 3 months. And if I see sustained usage, I'll probably buy for a year. I think the question is more about discounting invoices, especially if you're selling to like a mid-market or an enterprise, not like a B2C kind of a sale. So my only thing is, if you have to discount, right, ask for something in return. Say, give me a written testimonial in return, right? With your photo, with your whatever, or a video testimonial or something, right? I mean, there should be a value for that. Saying, we'll discount it, but we would request your help in providing us with a testimonial, and get that and put that in your About Us page, as Akash mentioned. Make sure you get something in return. I mean, it shouldn't be for nothing.
Got that. So, like, every other question, I think here also this is highly contextual, right? Depending on where you are, what you want to achieve. We could take like two quick examples, right? If you're trying to optimize for cash flow, right, to have money in the bank, and by going ahead and giving a $10 discount and getting cash upfront, if it's going to help you with your runway, then yeah, why not? Right? If it's going to help survival of your company, yeah, yes, why not?
Of course.
And if this is a product that is going to take time for people to start using, then in terms of even customer success, if somebody is paid upfront for the product, then they would use it for a year, right? So then you can go ahead and ensure that you have a captive audience for a year, and you can put all your customer success might to ensure that you have a 1 year period to make them win and keep them as a recurring customer. In a month they might just churn out, right? So these are just two nuances that we took, right? But in SaaS, depending on where your company is and what you're doing, a lot of this matters. So maybe the best thing to do, Neeraj, is to, if you have a CFO or if you have a finance friend, shoot this to him, right? He'll be able to look at your books and, give you the best advice. We are SaaS folks. We understand SaaS well, but I think they understand money better than us. Right? Great, gentlemen. I think with this note, I would really like to thank the two of you for taking your time and doing this for us and everybody else who are listening. I really enjoyed the conversations that I had with all of you. Started with SaaS, went into funding, and then I think we somehow hit a meta level in our discussions, and coming back to something SaaS, thanks to Neeraj for his question, right? Thank you so much, Akash. Thank you so much, Vishnu. I had a blast doing this. I hope you guys enjoyed yourself too. Until next time.
Likewise.
Thank you.
Thanks, Rohit. Thanks, Yusuf.
All right. Stay safe. Bye.
Bye-bye. See you guys.